Hello and happy Monday from Markets Policy Partners. I'm John Fagan here with the top 5 macro themes for this week. Coming in at number 1, up from number 4 last week, are U.S. and global growth concerns with U.S. GDP print for the first quarter on the calendar this week. The economic situation is squarely in the crosshairs for investors here. Expectations are for a modest 2% annualized growth rate for the U.S., down from 2.6% the previous quarter. And the estimates are filled with uncertainty, given the noise that we saw in this quarter, and so much of the data that's been coming in has really been garbled. Number 2, earnings results turned more nuanced. Earnings came in last week at number 2 and stayed there. We saw the first big banks, JP Morgan and so forth, impress, but last week things got a little more nuanced. We saw some weirder numbers from Morgan Stanley, and we had a high-profile disappointment from Tesla. This week, we've got the heart of the order, murderer's row here with Meta, Alphabet, Microsoft, and Amazon. Although Apple is next week, this is the intense portion of earnings season, and we expect markets to essentially take a lot of these in stride as expectations have been pretty muted coming into it. Number 3. This is where the Fed has fallen from number 1. We're now getting into the blackout period ahead of the May meeting, and so things will quiet down a little bit. Speculation is that the Fed is a one and done. We think there's enough evidence for the Fed to pause in May. But we're in the minority there and concede that it's a pretty close call. We, however, continue to see Fed fund futures being too optimistic about rate cuts in the second half of this year. We think that the Fed is going to prove very stubborn and unwilling to cut rates, even in the face of mildly recessionary conditions that we expect in the second half of this year. Number 4, the debt limit fight moves up from number 5 to number 4 this week. We saw the news flow around this intensify as the X date, the drop dead date for when this has to get done, moving forward in most analysts' estimates per lower tax receipts that have come in. And so the urgency level is higher. And this is when House Speaker McCarthy this week is supposed to put his bill on the floor and see if he can get enough support for this budget arrangement from his fractious caucus. That could trigger a set of negotiations, but if he can't get it through, then we're back to square one. And lastly, number 5, U.S. inflation data. There's not that much fear around this week's core PCE price index. This will be the third in a string of March readings where CPI and PPI were generally in line with expectations or cooling from previous months, and showing that the January blip was perhaps just an anomaly in an overall cooling trend. But there'll be some focus on that, and that wraps up our top 5 for this week. Good luck, and find us on the web at marketspolicy.com.